and it's something that's going to ultimately play out. You saw the tariffs. I think it's had a contained impact on Nvidia, but it continues to be our belief this is all setting up for a golden age of AI, not just for Nvidia, but for broader tech. But it's a bargaining chip as they negotiate with Beijing.
What about, lastly, and then I got to go, Nvidia, what is next week, the earnings, right? What do we think about this heading in?
Get the popcorn, get the watch parties ready. I mean, this is going to be a jaw dropper. I think Street's still underestimating in terms of where numbers go over the next 1-2 years. I think this is one. They will battle, but ultimately $4 trillion market cap is on the horizon.
We'll leave it there, Dan.
Look, no doubt. I mean, there was some soft around the edges that we saw with Amazon. We saw it on YouTube from an ad perspective. But then you look at what we believe is just this fourth industrial revolution that's getting built out. Look at Microsoft in terms of the Azure guidance. We look what we saw from cloud, from Google, from Amazon, from Microsoft. Look what we saw from Palantir, from a use case perspective. And I think ServiceNow also starting to see it.
Dan Ives underscores Nvidia's central role in the US-China chip debate, emphasizing its dominance in AI as a significant bargaining tool. Despite geopolitical challenges, he remains confident that Nvidia will thrive, predicting its upcoming earnings will exceed expectations, further cementing its position in what he calls a golden age of AI. He highlights the broader fourth industrial revolution, with major investments in AI infrastructure and cloud computing from tech giants like Microsoft, Amazon, and Google. Ives sees this as the start of a massive trillion-dollar investment era, driving growth in the tech sector despite some macroeconomic hurdles. Looking ahead, Ives anticipates a wave of mergers and acquisitions, particularly in AI, cybersecurity, and software, fueled by a favorable regulatory environment. He believes this shift marks a transformative period for tech companies to accelerate growth and innovation across both public and private market.
So I mentioned your new title, and with that comes with a little bit wider scope of a coverage universe, now including Nvidia. How do you see the political debate around selling chips in China? Is there risk around that now, more so than ever, because of the relationship that Trump's going to have with the Chinese?
Yeah, I think it's a bargaining chip because Trump, Musk, everyone knows there's only one game in town, it's Nvidia, right? It's Godfather of AI, Jensen, Nvidia, and this is going to give them more negotiating power in terms of chips into China. Trump getting in, combined, I think everything Alex talked about, great, phenomenal points. This is now the beginning of the new era of this bull market for tech.
So we've seen in some sectors a boost now that there's the idea there'll be less regulation. Do you expect tech to get that same kind of boost longer term? I mean, I think the consensus is that Lina Khan will no longer be at the FTC. There's going to just be a different regulatory environment.
Khan's been a nightmare for tech. And I think the view is with her out, it changed the whole landscape. I think with some of the stuff Alex talked about, the regulatory environment is going to be so much more friendly in terms of deals, in terms of M&A. I think big tech, you're going to now start to see them getting a little more aggressive when it comes to M&A, specifically in AI, as this AI revolution plays out.
So Alex, I want to come back over to you and talk about some of these big private tech companies. I mean, I'm talking SpaceX, $210 billion valuation, OpenAI, a more than $150 billion valuation, Stripe, kind of a sleeping giant, over $65 billion valuation. Does a Trump presidency, does this lead them to possibly come to the public markets faster? Does it change the valuation picture? I mean, what does it do to these companies that have been outside the public markets, seemingly waiting to possibly jump in?
Yeah, I think absolutely we're going to see the public markets open sooner, now that we have clarity about what's going to happen in the White House. I think, as Dan points out, M&A markets are open for business. We have a lot of friends who are incredibly excited to start making acquisitions, and that'll help recycle the capital, in addition to the IPOs that I think are inevitable and just, waiting to happen.
All right, so I get to have some fun. I get to do what you normally do. I get to play with the charts here. So we're going to start with our first chart, looking at the S&P, the SPY, in fact, and kind of looking at the rally for the Trump trade. We're going to show it in just a minute. So you say right here, here's what we need to watch, kind of a gap right here. What's this gap telling us up here?
So I think that's our theme of the week, is to watch the gaps from last week. So we saw the very positive reaction on Wednesday, and with that, the market opened very strongly, and it left these gaps in its wake. So we are always watching the gaps, because if the market, or the spiders, or really any individual security, were to pull back very quickly into that gap, that tends to be a setback. So the gaps can be clues as to the sustainability of the up move. For SPY in particular, it rallied nearly 5% last week, a really impressive up move. Saw good upside follow through straight away, so it has a good chance of holding that gap, but it really does need to hold that gap to preserve the breakout this week.
All right, we are seeing a lot of enthusiasm, at least in the pre-market right now, so we'll have to wait and see if the technicals lead us in the right direction. I want to go to something else right now. I'm going to clear the charts. Again, this is a lot of fun. I see why you like to do this, Katie. Let's go to the VIX chart right now. So we're going to look at overbought and oversold conditions from here and then from about here. So the top line, I believe, is the overbought, and the bottom's the oversold. What is that telling us? What are the charts telling us here?
It's really interesting on the VIX. A very clear trading range has unfolded. That range is bound by support roughly 15 and resistance roughly 22, 23. Within that range, we would say that the high volatility cycle that began in July is still intact. Whereas if that 15 area was broken more decisively, the bottom boundary of that range, that would suggest that the market is indeed going to be able to continue higher. And of course, that would mean a lower volatility cycle has taken hold again. So with an oversold condition in the VIX near that support, you would expect to see some consolidation, meaning it starts to go sideways and ultimately sees an oversold bounce. And you could then translate that, of course, to the S&P 500, to which it's inversely correlated, and expect some kind of consolidation and pullback in the S&P. It's just a matter of how dramatic is that going to be.
All right, Katie, we're going to get to another stock, newest Dow component. Every trader I talk to owns it, talks about it all the time. We used to almost be CNBC/Nvidia here, so I'm talking about Nvidia, of course. I'm going to show the chart right here. So right here, we're seeing the 100-day moving average right here. This is the purple line, and the purplish line. The 200-day, that's the goldish line. And right here, you're seeing an area of resistance. What does that tell you about this stock and this trade?
So we're saying that Nvidia is so-called testing resistance. The 141 level was cleared very decisively last week on a 9% rally. So that leaves a breakout pending confirmation this week in our work. So on Friday, if we see a close above that level by Nvidia, that would confirm the breakout in a bullish development. The measured move price objective from that breakout would be about 157. Maybe that's a little bit conservative longer term, but it's more of an intermediate term objective. And the reason we would wait for that confirmation is really twofold. One, because Nvidia, like everything else, has that gap that we want to keep an eye on this week. But there is a short-term counter-trend signal likely today from our DeMark indicators. And also there's a pretty good spread right now to support, which is roughly 130 for Nvidia. So we really want to see that confirmation to feel like we can then be more constructive on the upside follow through.
This is the start of just a massive, we believe $1 trillion of CapEx over the coming years. And I'm not saying that it's necessarily going to be, there's going to be some speed bumps on the way in tech, but I believe this tech bull market is well underway, despite obviously some of the macro worries that we've seen over the last week. And that's how we're hand-holding investors through it. Yeah, and that's really across Asia in terms of suppliers, how we've always been able to really, I think, get a beat in terms of our view of the supply chain for iPhone. And this started off units coming out, we're calling 80 to 84 million for iPhone 16. And now we're at, we believe, about 90 million and potentially higher. And that's important because that's essentially what Apple is telling suppliers in terms of what the demand outlook looks like on iPhone 16. And we continue to believe this is the start of an AI-driven super cycle for Apple.
Your new note says under a Trump administration, you see more M&A when it comes to tech. Why is that, and what areas?
Yeah, it's been I think it's going to be a Goldilocks when it comes to M&A. Look, regulatory has been a huge issue, valuation hubris. I think now we are going to see a tidal wave of M&A, specifically around AI infrastructure, software, cybersecurity. I think I've seen many on the private and public. It's almost like a tech prom. But on both sides, no one's really asking anyone to dance. Now, I think this thing starts. We could see just massive M&A under a Trump administration, in my opinion.
All right, so that's in the public markets. Alex, I'm going to come over to you. You're an early stage investor, as we mentioned, in Pinterest and Airbnb. You have a lot of exposure to the private markets. Following the election of President Trump, or President-elect Trump, I should say, what does that mean for tech companies in the private markets? Before we heard valuations were under some pressure. Does that change now that Trump is taking the White House again?
I think it's really bullish for private companies overall. I think there's some in particular, especially the companies in the Elon Musk universe like SpaceX, that it's just extremely bullish for. We've seen what Elon Musk can do under what has essentially been an adversarial White House, with a neutral or a favorable White House. I think it's just going to be incredible what we see. And I think this is across the board in private markets.
So, Alex, we were talking, off air. You call it the Musk-conomy. We have a graphic right here calling it Elon Musk corporate empire. I mean, it's a wide range of companies. It's the Boring Company. It's XAI. It's, of course, X itself. It's Tesla, SpaceX. So when we look at these different companies, in your mind, what kind of valuation premium do we now have under what seems to be a much friendlier administration that Elon Musk actually may be a part of?
Yeah, I think there's a sense in which you could even say that SpaceX and Tesla are so big that they helped Trump win the election. I think with less regulation and an ethos towards building in the United States, we're going to see the deployment of these, potentially extraordinary infrastructures at a much, much faster clip throughout the country, but especially in the redder states that voted for him.
So, Dan, I want to come back over to you. Again, your new note says you're going to see more M&A, or you expect to see more M&A under a Trump presidency. But we were actually together on election night. You were here in studio with us. We were talking about this. We saw some of the stocks surging. Tesla, we've covered that ground. We well covered it. But you say there's some other stocks, Palantir, also Google, and also Apple, you see as beneficiaries. Why is that?
This is going to be a golden era for AI infrastructure. And I think front and center is going to be Palantir. I think everything Carp and the team are doing, I think from a U.S. DoD perspective, in terms of the belt, we're going to see massive spending there. Hyperscalers. You look at Microsoft, Amazon, Google. This is it is going to be a new era of AI infrastructure. And then when it comes to Apple, despite some of the China tariff worries, I think this consumer AI revolution goes through Cupertino, which is why I believe, in my opinion, for tech,
for Nvidia.
Dan Ives highlights Nvidia's pivotal role in the US-China chip debate and its dominance in AI, predicting it will thrive despite geopolitical challenges. He foresees a golden age of AI, with massive investments from tech giants like Microsoft and Google driving innovation in AI infrastructure and cloud computing. He also anticipates a surge in mergers and acquisitions, particularly in AI and cybersecurity, as a favorable regulatory environment emerges. This, Ives believes, marks the beginning of a transformative era for tech, paving the way for accelerated growth across public and private markets. How do you think Nvidia's role in the AI revolution will shape the tech industry's future? What impact do you believe a surge in mergers and acquisitions will have on innovation and competition in the tech sector?